Joining us. Hello for the folks who logged in at exactly 11 o'clock. You'll have heard this for the last time. Welcome to the Adasina Social Justice Investing Update. This is a semi-annual event that we're holding, and that is beginning with this session today. Want to let you all know that we are recording and we want to be mindful of consent for using people's images, voices, chats. So if you don't want to be seen or heard in the recording, please take this moment to adjust your Zoom settings now, and know that we will be sending out a recording of this event pending compliance approval, hopefully along with the slides as well. We have an exciting announcement this week. The Adasina Social Justice All Cap Global Exchange Traded Fund, or ETF, has reached 53 million in assets in 6 months. The press release went out yesterday, and we're very excited about that. $50 million is generally seen as a threshold for viability for exchange traded funds. And so we're very excited to reach that milestone, and in just 6 months. And I'd like to just get started by introducing myself. I'm Rachel Robasciotti. I'm the founder and CEO of Adasina Social Capital. And it's my job today to give you some background on the who, the why, and the what of Adasina and our social justice investing approach. And yes, I'm actually going to talk in that order about the who, why, and what. So bear with me. I think it will start to make more sense as we go along here. But before I tell you about what Adasina is and why it matters, it feels important to me to start by breaking a financial industry taboo. We have a taboo in our industry against mixing our personal and professional stories and lives. And it feels particularly important as we work on issues of racial, gender, economic, and climate justice to create an invitation for bringing our whole selves to all of the places that we live, including our work. And I wanted to extend that invitation to all of us here today and start by bringing my whole self. I was born and raised in Oroville, California, which is a poor and it's a rural, unfortunately very segregated community in Northern California. I grew up in a Black family, almost entirely made up of women, because so many of the men had been killed or incarcerated in my family. I've lost 3 family members to police violence. That included my father and 2 cousins. And as a Black family of mostly women, we were the poorest within that community. We were homeless on multiple occasions. There was toxic environmental waste in my neighborhood. I remember several times really worrying about my cousins because they accidentally went swimming in the wrong swimming hole. And when the Oroville Dam that supplies a tremendous amount of water to much of Northern California almost collapsed in 2017, it was my old neighborhood, the south side of Oroville, that had to be evacuated and was nearly wiped off of the face of the earth. I'm sharing all of this with you as part of who Adasina is because I believe that companies tend to keep the DNA of their founders. And I want you to know where the DNA of Adasina comes from. My personal knowledge of systemic, racial, gender, economic, and climate injustice has come to me firsthand. And when I graduated from high school at the age of 15 and went on to college, I was pretty determined to understand the roots of the collective suffering I was experiencing and to be part of making things different, not just for me and my family, many of whom still live in Oroville, but also for the many other communities that deserve justice. I want to talk to you a bit about why what Adasina does, why what we do matters from that frame of understanding who we are and kind of where our DNA comes from. We believe at Adasina that we are, in a social sense, we are at the very beginning of a transition from an economy that's based on extraction from people on the planet into a new and regenerative economy. There are many of us in Adasina as part of a large community of folks who are committed to that being a just transition. And what we mean when we talk about a just transition is we're talking about building a new world through the repair of past harms first. And that, of course, will mean significant direct investment into the communities that have been extracted from. But that is, interestingly enough, not what we are up to at Adasina. At Adasina, we've chosen to invest in public markets, not because we believe that it's the only way to invest for impact, but because public markets are currently where the vast majority of wealth resides in the world. And inside of a capitalist economic system, wealth is power. And we need tremendous power to make systems level change. So as we all invest in this new regenerative economy, we still have to grapple with and reckon with the fact that we are in an existing economy and it has financial markets that include very large public companies. And those companies can either contribute to solutions or exacerbate the harms of systemic injustice. And what we know at Adasina is that as investors, we have tremendous power, that the seat of the investor is ostensibly where the accountability ends for these publicly traded companies. And as a firm that is made up almost entirely of women, Black, Indigenous, and people of color, and LGBTQ and gender nonconforming folks, we come from communities that are under the foot of systemic injustice. And we believe that sitting in this seat of power as investors, we should place that power humbly in service of advancing grassroots movements for racial, gender, economic, and climate justice. So that's a bit about why Adasina matters. And now that you have the why and the who, I'm going to switch us to some slides and start talking about what Adasina is. So in the broadest sense, we are a bridge between social justice movements and financial markets. And we're doing that work. Many have attempted to do this work. It has primarily been from the seat of the social justice movements and those social justice organizations. But as I mentioned earlier, we know where the power lies and where the ultimate accountability lies in this system that is at the beginning of its transformation. We are an asset manager. We call ourselves an investment and financial activism firm. We have both public equities and fixed income strategies. The fixed income strategy is a municipal bond strategy. In all of our strategies, we center the communities that are most impacted by the issues that we intend to address in order to set the standards for what aligning with justice looks like for these large, powerful public companies. Let's go to the next slide. I'm not going to walk you through this particular slide. It's pretty self-explanatory. We often get the question, like, how do you go from a base of 9,000 global all-cap companies all the way down to 900? This is somewhat of the simple story. And this kind of shows you our basic process of using our social justice investment criteria and kind of going through the various layers to get down to, on the public equity side, what ultimately ends up an index of almost 900 companies. So today we're going to focus on the public equity strategy because we feel like it's the best way to demonstrate for you how all of these parts, how our deep commitment to and embeddedness in social justice movements actually results in a portfolio. And let's move to the next slide. I'd like to share with you something we haven't, we get a lot of questions about this, so we decided to make a visual. We want to share with you our process for our public equity strategies. You can see all the way to the left, we have, we start, well, let's see, let's go to the next slide, I'm sorry. There we go. This is our process. This is a brand new image. So we start with our social justice partners. They're the ones who are telling us what our criteria for investing or our screens should be. The screens is kind of the financial industry term. From that, it's really important that we continue to work with those partners to understand not only the what, the investment criteria, like, okay, what should you be measuring? Racial, gender, economic, climate justice, but also the specific impact metrics. So we're talking about getting more specific, like down to decarceration, equity and inclusion, and environmental impacts. From that, once you know how to measure something and know how to measure it well, because you're continuing to be in relationship with these social justice partners, for each metric or each representation of how, you actually have to find a corresponding data set. We're going to kind of summarize this in a moment, but suffice to say that we have 61 impact metrics specifically, and we have 61 data sets. And those are because we start with 40 sets of like specific screens, but sometimes we have multiple ways of measuring something. Once we've taken that set of 9,000 all-cap global companies and kind of put them through a filter based on these social justice movement kind of investment criteria and the specific metrics, and then the measurements for each company about how those data sets, we then integrate that information into an index or a publicly available list. I often refer to this as kind of like a public recipe for how you go about creating a particular portfolio. And then we actually take from that index and turn those into real world portfolios. Now, the way that we go about making a lot of our impact is through a subset of those like large 61 data sets. We have a subset of public impact data sets and campaigns. We know that as investors, that so often what we are looking for on public companies is data, and often what needs measuring doesn't already have the data. And so we strategically work directly alongside social justice partners where there are gaps in the data, particularly as it pertains to the S or the social component in environmental, social, and governance or ESG considerations. We are working with social justice movements to build data sets that correspond to the impact metrics that they say matter. And then we use those data sets to organize investors such that we build solidarity for public markets investors focusing on the issues that these communities that are most impacted tell us matters. Let's go to the next slide. So I just kind of want to summarize here. So you can go to our website and see our full list of social justice investment criteria. There's 40 specific screens, everything from prison involvement to screens surrounding carbon and animal treatment. So there's 40 screens, but what that comes down to is 61 different ways of measuring corporate accountability around those issues, and 61 corresponding data sets that are rigorously and thoroughly vetted. And when necessary, we actually support the creation of those. And then of those 61 matrix and data sets, there are 3 currently, soon to be 4 public impact data sets. You may be familiar with our impact data set for racial justice, the subminimum wage, forced arbitration for sexual harassment, and in the fall, we will be coming out with an extractive agriculture data set that will help investors align around what's at the intersection of racial and climate justice. Sometimes when people hear about our impact, they notice that we work on very specific pieces, very specific categories, and these impact data sets that are, they are very specific metrics that come from working directly with social justice organizations to put investor power behind the specific pieces that matter to them. Let's go to the next slide. I kind of want to show you what this looks like in action. Okay, so we have the social justice partners. When we were looking at economic justice and its intersections around racial and gender justice, as well as climate justice, We took direction from both the Poor People's Campaign and One Fair Wage. These are organizations that are led by the people of color and people who are from the communities that care about issues of economic justice and are most impacted. And we have a number of social justice partners, but these are the ones we worked most closely with. That's one of the ways that we know we should be working in our investment criteria on economic justice and have a more specific focus on wages within that. That's not always what the financial industry believes we should be measuring if we're worrying about economic justice at all in finance and in public equities, but this is the one that those impacted communities told us to focus on. Quite specifically within wages, how you measure that, how you measure an issue of justice is around the payment of subminimum wages for employees. In the United States, you can pay $2.13 per hour and get away with it as a large publicly traded company. And it is an outcropping of a post-slavery attempt to exploit Black women's labor, quite specifically, and it continues to this day. There wasn't a public data set for which companies pay subminimum wages. And so along with One Fair Wage, we created a campaign that's the Investor for Livable Wages and the subminimum wage data set, as well as a campaign that I'm very excited to have Renee talk about in just a moment to give you an update on what's happening with that in this particular example. You can also rest assured that that particular data set, along with the 61 other data sets that we use, is part of the larger filter that's used to create the index, our Adasina Social Justice Index. And from that, we build our Adasina public equities portfolios. We both have an exchange traded fund and we have separately managed account offering that will be available next month. So for more information about the Investors for Livable Wages subminimum wage data set and the campaign that we've been doing organizing investors around this particular issue, I'm going to leave this slide up, but ask that we turn it over to Renee, who's joining us by phone to talk a bit about what that progress has been. And I'm very excited to share that with you now.
Sure. Can you all hear me? Rachel, can you just say yes?
Yes.
If you can hear me?
Yes.
Okay.
Hear you great. You're doing great.
Yeah, great. So first of all, sorry everybody. I assure you the tech issues I'm having are far more annoying to me than for you to see a black screen for a few minutes. So I apologize for not being on video and Zoom properly. So I'm Renee Morgan, the social justice strategist here at Adasina. I use she, they pronouns. So yeah, as Rachel mentioned, that we are the bridge between social justice organizations and investors and do organizing on both sides of those. I am the person that most often leads that work. And I've been thinking lately that it's, I like the analogy of a bridge, but it's a little bit more like a seesaw. That somehow I'm straddling in the middle of the seesaw between social justice organizations and investor organizations and investors. And sometimes the effort, as Rachel said, most often in the beginning, we have developed relationships. And I want to really point out that that takes a lot of relationship building and trust. Most social justice organizations, as you probably know or are aware, don't really trust the capitalist system because most impacted communities have been harmed by capitalism. So a lot of it is just continuing to show up and like carry the message and show up in the way that is they want us to show up and use capital markets in a way that is appropriate and carrying the work that they're doing. So in the beginning, a lot of it is relationship building, and we've spent a lot of time doing that. So when it came to the Poor People's Campaign saying, we really want you to focus on wages, we were able to establish a relationship with One Fair Wage. And One Fair Wage has been doing this work for decades. Saru Jayaraman is the ED there, and we have a great relationship. So as they said, yes, the subminimum wage, and we worked with them to create the data set, as Rachel said, that then turned into a campaign. And so we developed a letter telling investors this is why this is terrible. It's terrible to pay people $2.13 an hour. The legacy stems from there's some racial, from slavery, and there's a lot of racial justice issues embedded in that. It's gender justice. It really is everything that we embody. So we made the business case as to this is also just bad for business. And so we started that about a year ago, and I was able to establish a lot of relationships then in the investing community. And Saru and I were on many calls with many different investors in the foundation world and in the public sector. And we reached out to all of the companies that are paying a sub-minimum wage and asked them to change. Of course, that didn't happen, but it started gaining traction. And what happens is sometimes, a few months later after developing and talking about a campaign and raising up, really lifting up the issue in the media and in the investing world, and then all of the action on the ground, the fight for 15, and there are activist groups that have been working on this for a long time, have pressure on the streets, and then policymakers are looking at it. It has snowballed. And so on an investor call a couple of weeks ago, Denny's, actually many CFOs and CEOs, were basically telling shareholders and investors that their business was doing really well in California. And the thing about California is that they pay a full minimum wage, so they pay $15 an hour. So on one hand, these companies, these CEOs, these CFOs, these COOs are telling investors that California is great for business and that the $15 an hour actually isn't that big of a deal. And then on the other hand, they're in Congress fighting the rate to raise the minimum wage, and they want to keep paying workers all over the country in 46 states $2.13 an hour. So because we had been working on this and we're in the middle of it, and both in the social justice, working very closely with One Fair Wage and investors, when it came to light that this happened on an investor call, it was very easy to move quickly and work with One Fair Wage and other investors and really target those companies that were exposed in the Newsweek article. And the interesting thing is, because we divest, once we decide, once we are told by our social justice partners that this practice is just bad, there's no sustainability here, there's no life affirming, there's nothing good that can come from $2 an hour. In our own portfolio, as Rachel said, we divest because we don't want to be invested in anything that is that harmful. So we don't actually have shares to then go to the companies. But because I do a lot of investor organizing within the industry and are part of other groups, we were able to work with others and use some of their shares and attend many of the annual shareholder meetings and bring this topic to light. And what happened is we actually got a fair amount of traction, particularly with Denny's. And so Newsweek wrote an article about a shareholder revolt and that investors are really wanting these companies to pay a full minimum wage. And an even more current update is, as of this morning, Dine is actually reaching out to us because we created another investor letter. And one of the interesting things about this is sometimes some of the larger firms can't be public about some of their work for a variety of reasons. They may hold the companies in their portfolios. They may be in another dialogue with the company. But because we're pretty nimble, we can, and because we're very vocal and out there about economic, racial, and gender and climate justice, it's really easy for us to represent the industry in cases like this. So once we submitted another letter, I actually got an email this morning, and hopefully we're going to be able to engage in a conversation with Dine. And it is our goal, obviously, to get one company that's publicly traded to pay a full minimum wage, and if not, to not stand in the way of policy that's working its way through Congress. And if we can get a full minimum wage for over 14 million workers, they will go from $2.13 an hour to a full 15. That is the difference between having to rely on government assistance or when something like COVID happens and people are unable to work for months and months and months and over a year and be subjected to sexual harassment, to an actual living wage. It just gives 14 million people dignity, you know, and sustainability in their own lives. So the work is really powerful. And I'm just hoping that this is translating to how investors in social justice, when they work together, they can leverage for real change.
Thank you so much, Renee. This is even news to me about DINE. And of course, while we are working to end the sub-minimum wage, full stop, period, across the board in public companies, they have been such a solid lobbying block, and they have been basically unmovable inside of the National Restaurant Association. Folks in the movement call them the other NRA, that we have to set kind of like goals for ourselves. And we know that if we can get one company to move, it's probably the beginning of really a watershed moment for this. And we're feeling really hopeful. I'm excited about what's next. Thank you so much. I would like to now move to the next slide and have our Director of Investor Services, Rachel Freeman, to go ahead and give us a summary of, like, once you know all of this about our impact and our process and how we actually connect social justice movements to financial markets, people have there's a lot of advisors here just have some questions about, okay, like brass tacks, tell me about this index. Are you actually responsible investors? So Freeman, why don't you walk us through this piece here?
Yeah, absolutely. Thanks so much for teeing that up. And Renee, thanks so much for talking, even though we couldn't see you on video, which for those of you who haven't seen Renee before, highly recommend it. Thanks for having me, everyone. Rachel Freeman, everyone here calls me Freeman. Feel free to call me Rachel or Freeman. I'll answer to both. Thanks for joining. As Rachel said, I'm the Director of Investor Services here at Adasina. Primarily, my role is to empower financial advisors and broker dealers, institutions to better understand our products, specifically our social justice index, and then we have our exchange traded fund, which seeks to track is the compliant language, the Adasina Social Justice Index. My job is really to provide resources and information, and so which is why I got the fun slide with these donut charts, which, by the way, are, if anybody has never seen a donut chart, it's like a pie chart but better because it's a donut. But basically, these three charts can be found on our on the Adasina Social Justice Index fact sheet, which there's a lot of notifications on the chat, but I assume somebody's going to plop "thank you" into the chat here so that y'all can have your hands on the actual resource. But also you can take it to the Google for the Adasina Social Justice Index. So this page here is just a summary of of where the companies fall as far as country weightings, sector weightings, and market cap weightings within our index. The most important thing I think that folks are looking for, especially as advisors, is making sure that you're doing your due diligence and that you're meeting your fiduciary duty with understanding kind of what makes up a fund and really where the companies fall within the fund, but also how that fits into a larger scope of your investment portfolio and your model portfolios and such. If we look at this kind of top left bigger square with the donut chart, you'll see that the dark blue represents the United States. And for those who can't see it and who are just listening, there's a donut chart that's that says top 10 country weightings, and the United States makes up 50% of our index. And that's likely to be a question for a lot of folks who are investigating and kind of saying, hey, how much of a home bias do you have as far as where do your companies that you're investing in or that that make up the index, where do they live? So 50% in the US, and then we go a little bit further down with other countries, which makes up 17%, which is just a lot of smaller pieces of international companies. The next largest is Japan at 6%, Canada at 5%. So this you can find on the index fact sheet. It's really helpful as far as understanding kind of our broad diversification of where the companies within the index live. In the top right, we have a box that says sector weightings, which is another donut chart, really breaks down the what sectors the companies within the index live as well. This is probably going to be important for those folks who are concerned about, the narrative around ESG, adding too much to one sector or having too much of a high concentration. I like to see that this donut chart has a really good representation, with the exception of oil and gas and weapons and firearms, a really good representation across the board of sectors, and a fairly balanced portfolio. If you take a look at the ETF fact sheet that we have, which seeks to track the Adasina Social Justice Index, you'll notice that there are some slight differences as far as the allocations, but that they're very close as far as the sectors in the index and the sectors in the ETF. The most important thing to think about here is, as Rachel mentioned, the starting universe of companies that we start with, the FTSE All Cap Global Index. The ticker in the bottom left you'll see is GEISAC. That index has fairly similar sector weightings and country weightings as our index, and that's really what we're looking to do. We're trying to give advisors and institutions the ability to say, this is a core strategy. We can swap this out with something like the FTSE All Cap Global. We can use Justice as an index representative in the same way. And there's some sound, and I'm not sure if someone's trying to talk, but feel free to interrupt or raise a hand or throw something at me. The last box in the bottom, yeah, please put your questions in the chat. The last box in the bottom right is the market cap weightings. This is an important kind of breakdown, and I like it because it's very simple, between large cap, mid cap, and small cap. You'll see on the right-hand side in the key for large cap that we're looking at companies that are greater than $10 billion market capitalization globally. Mid cap is 2 billion to less than 10 billion, right? So the middle ground, and then the small cap is less than 2 billion. Something to really keep in mind here for us, and again, this is for investigators, so sorry for those that might be snoozing through this part, I'll wrap it up quick. The most important thing to think about here is that we do exclude microcap stocks, and which is companies with less than 300 million market capitalization or a $1 million average daily trading value. This just contributes to a slight underweighting of the small and mid cap companies versus the FTSE All Cap Global that we start with. But this is the allocation that makes up the index. And then the last thing I'll say before I turn it back over to you, Rachel, is that in the bottom left-hand corner, we have the return metrics, which I think, yeah, okay, as of 3/31/2021, this is as of inception. This is something that you can find on our fact sheets as well, but we like to show that, especially when we're talking about, making something from something else that we're optimizing back to another index, we like to show that we're close. And that's really what we're aiming for here. Some folks talk about tracking error and tracking difference. If you take a look at this, I think that's 1.17% difference between the two, between the Justice Index and between the FTSE All Cap Global. And I'm ignoring the chat. Please, somebody raise your hand if someone has a question for me in particular. But I like to think of this as kind of, if that's what our objective is, we're within, somewhere between 1 and 2% of reaching that goal of matching the return. If we're saying we're trying to match the weightings and sector weightings, market cap and country weightings as closely as possible, we're also, we're doing a pretty good job on matching the return. And of course, that changes over time as the market fluctuates, but meeting our objectives. So thanks so much for listening to the most fun part of the program. If anybody has any questions, also feel free to, you can email and we can kind of do a deeper dive. And I think some fact sheets were plopped into the chat as well. Back to you in studio, Rachel.
Great. So we actually we wanted to set aside a good amount of time for questions. We've already been doing some answering of questions in the chat. But we wanted to just take a moment to have you hear from multiple of our team members who regularly answer some of the questions that were sent in ahead of time. So let's see, I'm going to transition there and pick up some of the questions that were sent in. The first is, and I'll ask Renee, who may need to be unmuted. I know we had to mute your line, Renee, but you may need to hit *6 to unmute, I believe. We have a question that is, do you have an example of when it's been useful to be an active fund? I guess that's rather than a passive fund. And Renee, if you can't unmute yourself because you're just on the phone, I'm going to give you a couple of moments. If you can't, then I will pass it to Fong to speak to that question, who's also part of the public equities portfolio management team. Okay, Fong, we'll have you answer that.
Thank you, Rachel. My name is Fong, and I'm the investment strategist at Adasina. In my role, I work really closely with Rachel and Renee and the rest of the Adasina team to help decide what companies are in or out of our portfolios. And to answer this question, one of the really important ways that we can make impact is to be able to react and respond to social justice movements and also to news that we learn about companies that are in our portfolios and ways that they start going against our criteria, our social justice criteria specifically. And one of those examples is a company named Alibaba. And this company is a very large company based in China. And it was one of the top 10 holdings in our index, and it passed all of our screens, our very rigorous screens. And Renee, as our social justice strategist, Renee learned about news of this company supplying the government of China with surveillance technology to persecute the Uyghur community, an ethnic minority in China. And we did more research. Renee shared research. We developed a process to do something called an intra-rebalance exclusion. And what that means is that we can actually take companies out of our portfolios and out of our strategies that fail to meet our criteria in between our semi-annual reconstitutions and rebalances of our index and ETF. And so we were able to react quickly. We talked amongst ourselves as a team. We brought it to our index committee for discussion and for vote. And we were able to take that company out within a matter of days from our index, and also pretty immediately within the day from our ETF. And we were able to be responsive in that way. And I'm proud of the process we've built to be able to do that and to continue doing that consistently in between rebalances in the future.
Excellent. Thank you so much, Fong, for answering that question about when it's been an example to be a good example. When it's been great for us to be an active fund. We often say that we tend to be rigorous in our research, passive when it comes to certain basic financials, not trying to do stock picking or market timing, but very active when it comes to issues of social justice. Diane, I'm going to ask you to speak to the next question that was sent in ahead of time. With all of this rigorous screening, are there any companies that actually end up passing Adasina's screens?
Hi, everyone. I'm Diane Manuel. I'm the Director of Foundation and Client Relationships. And I get this question frequently because we take such effort and time to share with people our process and to be as transparent as possible, and how we start with such a large universe of companies at about 9,000. And as Rachel and Renee mentioned, these companies pass through so many screens. We have 40 screens. And what's left after that? Well, there's quite a number of companies that are left actually in the index. There's close to 900. And Freeman shared the different market caps. They shared the sectors, which is great, but also understand there are very well-known names in our index. There's Starbucks, there's Adobe. In terms of small companies, we have Netgear, which is in the Bay Area and does networking. We have World Company, which is a clothing company in Japan. We have the Nissan manufacturing company. So there's a wide range of companies. Yes, some sectors end up being more weighted than others, but that's with any index, and you will see that. But there's tons of companies that pass our screens, and I think the important thing to remember, as Renee mentioned, our screens are pass fail. So either you're in or you're out. And that's the wonderful piece. There are almost 900 companies that are in. And every 6 months, we're reviewing those companies. And that's the important thing.
Thank you so much, Diane. I think this is a really good moment also to speak to something that we also hear on the other side of talking about exclusionary screening, like, wow, your screening is so rigorous as anything left is one end of it. The other end of it is, are you really doing anything with negative or exclusionary screening? And what I can tell you is that when you look under the hood and when you go deep and look at what data sets are actually available in order to judge companies and where they stand on issues of racial, gender, economic, and climate justice, you end up finding some very scary things that the largest ESG firms or approaches are often using without question. And one of the things that we do is we don't leave those things unquestioned. And I'm wondering, Fong, if you happen to have, you know, you and I were having a conversation recently where we were talking about, you know, when you do this rigorous of exclusionary screening, you somewhat end up with an inclusionary screen. You end up with the companies that are actually having to work harder to kind of pass all 61 of those metrics. Is there something that you would add there?
Rachel, you summarized it so well there. And it's exactly that. So our team, we internally track all of the exclusionary reasons for why a company is not included, as Diane mentioned. But we also track all the inclusionary reasons. So the positive information of when a company actually passes our screens. And that information, it advises our internal process to look at, you know, how might we need to broaden and deepen our data sets, right? Because we don't like to exclude companies that are only excluded for one reason, unless it's a very egregious reason and a primary reason that we emphasize through our campaigns. But we always try to find overlap, right? We always try to find as much data as we can and to incorporate as much high quality data as we can. So they have a really, truly, you know, just some super tight net of exclusions, but also a really tight net of positive information as well. And so even though we're not, we don't employ positive screening, we include that in our backend analysis to make sure that the data we use is comprehensive to create a great product that we can call social justice investing.
Excellent, thank you, Fong. Here's a question that's come in, and Renee, I wonder if you can unmute yourself. I think it's *6 or #6. Because I would love to have you speak to this question. If not, it's something that I can do. How does climate justice investing play into your work? Watching for the unmute.
Okay.
It's there. Go, Renee.
Yeah. Okay. So can you just, I was trying to figure out how to unmute. So can you just repeat the question? I'm happy to answer anything.
Absolutely. Yes. How does climate justice investing play into your work?
Oh yeah, sure. So interestingly, I think this is a really good example of how we end up being a little bit different than some standard ESG organizations. We went to some of our social justice partners, and interestingly and surprisingly to us, carbon. You know, our industry focuses a lot on carbon, but carbon and gas emissions and fossil fuel was actually not top of the list of what they wanted us to focus on. And it was about the food system. And most specifically, it's about extractive ag. And globally, folks are called peasant farmers, but what it really means is like local food. So farmers are being displaced because of the consolidation of the corporate consolidation around the food system. And so what we're working on actually currently, and you know, stay tuned for later this year, is we will have a really comprehensive, the most comprehensive, I believe, list in the industry around extractive agriculture. And that's agrochemicals, geotechnologies. There's like several points of data that we're going to be able to release around what is causing the worst offenders when it comes to extractive agriculture and corporate consolidation around food. It's actually really terrifying. And this is, again, at that place where racial, gender, climate, and economics come together in terms of who's being displaced, who's being the most impacted by extractive agriculture. Is that helpful?
That was great. Thank you, Renee. And I would just add that more people know this now than knew this when we started working on this issue. But if we eliminate investment in fossil fuel companies, but maintain current levels of investment in the extractive agriculture field, like it's responsible for almost half of all the carbon emissions, aside from fossil fuels. It's shocking, but when you talk to the communities most impacted by these issues, and they say, here's how you work at the intersections, that's the kind of early indicator information that we're able to get. And I think that with the book Drawdown and a few other sources, that's becoming more well known. I want to also, I'll address a question that was specifically placed around the expense ratio. We get this question quite a bit. Basically, like we want people to invest in alignment with their values, and yet at the same time, this is from a group of folks who do some education, yet at the same time, we caution them to not pay high expense ratios. So I want to talk a bit about the expense ratio for the exchange traded fund, which is the Adasina Social Justice All Cap Global portfolio, ticker symbol JSTC. The total expense ratio is 0.89% per year. The average expense ratio for an actively managed fund, according to ETF.com, is 71 basis points per year, or 0.71. When you compare those two, we are operating under a basic assumption that social justice movements are giving us early indicators of material risks in public markets. And so it makes sense to compare us to an actively managed ETF in that investors are used to paying for those type of risk management premiums. But there's still a difference there. There's still a difference of 18 basis points, or 0.18%. If you look at the cost of 18 basis points per, let's even just say $1 million, that's $1,800 per year. When you think about the systemic impact that we leverage the dollars in our ETF to make, if you and 5 other investors were in a giving circle and put $5 million toward giving in order to make systemic impact, would you be able to have the same impact? Like, what is that actually worth to you? In this case, you actually get to keep your $1 million, and it only costs you 1,800 of those dollars. And so I think that that's a pretty important lens to look through, in addition to the fact that we almost entirely employ women, Black, Indigenous, people of color, LGBTQ, gender nonconforming folks. And it feels extremely important to us that we are the future that we are envisioning for the world, which means not extracting the maximum possible labor for the lowest possible cost from our employees. Now, currently, we cannot pay our employees actually as much as we would want to. We want to actually pay them a lot more. But I can tell you that in order to reduce our expense ratio, we would have to go the traditional financial industry route of extracting the maximum possible labor from these folks who are already coming from under the foot of oppression within the communities that they come from. And that's just not something that we're willing to do. So not only do I think it's pretty inexpensive cost for making tremendous systemic impact, I also believe that this is actually what values-aligned investors want to spend their money on, paying good wages to people who don't normally get these jobs. And we need to pay people those good wages to do the extensive screening that we do, the very rigorous screening that we do. Let's see, I want to take some other questions from the chat. Here's an interesting one. I'm a little surprised to see large holdings like Visa, Anthem. This is going to be a great segue, Fong, for you to talk about the prison bond work. I'll talk a bit about Visa specifically. You can talk about Anthem. But what I've said to a client that asked me this question directly is that, do I believe that Visa is a paragon of the regenerative economy? Absolutely not. That is not investing directly in those communities. What I do know is that we have extensive screening and the identification of metrics by social justice movements, and they have to do a tremendous amount of work to pass all 61 of those ways of measuring for justice, all 61. And what we found is that it actually takes a tremendous amount of work to do that. But financials are also what's used to invest in things like private prisons or in the deforestation of the planet. And so we are actually quite rigorous in understanding where different financial companies lie. And while Anthem was included in the past, Anthem is not included in the index in our most recent rebalance that will be coming up shortly. And Fong, I think that's a good segue for you to talk about some of the changes that came with this rebalance, how Anthem and other financial companies ended up being removed.
Absolutely. So I mentioned previously that at Adasina, we're consistently deepening and broadening the data that we use for our strategy. And that's for existing data sources, but it's also incorporating new data sources. And through our prison funding screen, we divest from companies with significant investments or debt in private prisons. And I'm excited to share that we've actually incorporated new data now available to us to go even deeper into excluding funders of private prisons that invest in equity, right, of equity, and also the bonds of Geo Group and CoreCivic, two of the largest private prison companies. And yeah, we're excited to share it. I'll let someone else, if you'd like to make an announcement, where we'll share it, how we'll share it. Yes, our team scrubbed the information, included the names, and we're excited to release that when we are able to rebalance within the next week.
This is information that hasn't been consistently gleaned and updated. It's not available anywhere else. It will be part of our racial justice exclusion list that will be updated next month, so stay tuned. And that is the type of extensive scrubbing that we're doing to make sure that the portfolio that you have really includes the companies that are doing the work that it takes to clear all 61 of those very specific metrics that were set in place by social justice movements. So is it about perfecting public companies and making them wonderful regenerative companies? I'm not sure that's going to happen. But what I can tell you is that we can lift up metrics of justice and begin to align their behaviors so that at the very least, we are limiting the harm that may come from corporate behavior. And at our very best, we're actually, by lifting up those specific metrics, giving them a roadmap for how to align with social justice movements, and specifically those for racial, gender, economic, and climate justice. Let's see, do we have any? Yes, we have time for one more question. Well, this one is an easy question. What are the ways that prospective clients can connect with the Adasina platform, with your advisors, with existing advisors? So all of these folks, whether you're an investor directly, you are an advisor, an investment consultant, social justice advocate, you can keep up with all of our initiatives, those investor campaigns that we've told you about, as well as the developments inside of our social justice investing approach by subscribing to our newsletter. You can text the word justice to 55444 to sign up if you're not already signed up. Again, that's texting justice to 55444. So for investors and advisors who are interested in our exchange traded fund, the ticker symbol is JSTC. We'll put that in the chat, and you can read all about the fund, including important disclaimers and disclosures, and how to invest by going to the ETF website, which is adasinaetf.com. You can also reach out with questions by emailing us at invest@adasina.com. Last but not least, if you're on social media, you can follow Adasina on LinkedIn, Twitter, Facebook, just by searching for Adasina Social Capital. And I know that's a lot of information, so links to all the things I just mentioned are in the chat. Want you to know that everything we do at Adasina, we do in community. And that's because we understand that disconnections from one another are what allow for extraction from people on the planet. So we are moving toward deep community and connections. We're so happy that you've been with us today. And we hope that you'll join us in community. That first step of texting justice to 55444 just to sign up for our regular updates is a wonderful way to start. We welcome you in, and we will see you again in 6 months with our semi-annual social justice investing update. Thank you so much for spending time to be with us this hour.